Byju's. The company is laying off 1,000 employees across all departments. It's calling it, and I quote, a restructuring process. This despite an earlier email by Byju's Ravindran, the co-founder and CEO of Byju's, assuring employees that there would be no further layoffs. Now, the news of layoff comes at a time when Byju's has entered into a legal battle with US lenders Redwood for $1 billion term loan B. Now, Byju's has been mired in legal battle and saddled in financial woes. The company, India's largest startup, employs around 50,000 people and was once valued at $22 billion. BlackRock marked the company's valuation down to $8.2 billion last month. This is 60% below its peak valuation. Joining me at this point in time is Srinath Sridharan. Also with us is Sreedhar Prasad. If Sridhar is with us, I want to quickly begin by asking you, Srinath, what exactly is hurting Byju's right now? Byju's is saying it's laying off. It is part of what it was supposed to be, a structure. We knew that they will lay off because they had said that they will lay off. But then there was that letter shot out by Byju's Ravindran saying that the layoffs are done, completed. And this comes very suddenly on the back of the legal battle that we are seeing that is ensuing right now.
Thanks for that. See, I would rather treat this as slightly independent events. Am I audible?
Yes, Sridhar.
No. So listen, I don't think this is linked to the issues we are seeing from the lenders and the legal angle. It's bound to happen in any of the large businesses, and I would rather relate this back to the 2 decades old story of software services. We had ups and downs, heavily linked to the global economy, right? At that time, it was projects. Now it is funding.
Okay.
So the accelerated hiring to suit a future growth plan, a future valuation, and future matrices, many companies in India and many companies globally has done. That was a 2021 to 2022 time frame where everybody was accelerating, hiring people at obnoxious salaries. It happened, right? And somewhere that has gotten a jolt with the current economic scenario globally and the current speed at which funding is happening at all layers, whether it is for a unicorn, decacorn, or a small startup. So funding time, funding cycles have really slowed down. Everybody knows that. Now, in this situation, who gets impacted first is obviously the discretionary spend and the others are the large amount of human capital who were hired for a future scenario or for specifically aspirational scenarios, aspirational projects, and good to have a futuristic technology investments, so on and so forth. Now, this was bound to happen. And I would say in a larger cycle of, say, a 10 years, 5-year cycle, it will happen to a company at least once. Now, for this particular scenario, it's a little unfortunate that there are 2 or 3 parallel elements happening at the same time, which is why all of our eyebrows are going up. Is it linked A, is linked to B, B is linked to C? But I would rather attribute this to the expectation of an accelerated funding scenario, which never happened in the past 2 years. So had the fundings happened, all these boys or all these girls would have had a lot of work. All the companies, not just what we are talking about, but all the companies which has done some element of layoffs in the past 6 months wouldn't have had the need to lay off, right? So to me, projection of a growth, assuming a particular funding velocity, to me, that is the reason for the larger layoffs we are seeing in the startup world.
Okay, so essentially, it's interesting analogy, Sridhar. You're saying that these events are not really correlated. They are independent of one another. But troubles at Byju's, in fact, have been brewing for a while. Let me also quickly get in Srinath, who's joining us at this point in time. Srinath, troubles have been brewing for a while, and we were looking at troubles not just in terms of valuation, which we understand were now inflated, or the valuations have come down. I mean, maybe you'll be able to explain us better what happened there. But also, the prolonged funding winter has hurt Byju's. On top of that, there are new problems that are brewing in terms of legal battle that is fighting. If you could break it down for us, for the benefit of our viewers, what exactly is happening at Byju's at the moment?
Yeah, hi Shweta. Just to start off with the perspective, one disagreement I have with Sridhar's point about talent recruitment basis the funding velocity. Typically, you recruit basis the business velocity of what you need talent for and what you build on various projects. And I think that's where a lot of these startups repeatedly seeming to be, messing up with their talent acquisition. And also, one of the things is they've been distracted. If you look at their cap table, they've constantly been acquiring companies. Yes, startups acquire companies for either for talent or for newer technologies that they don't have. But to stitch all of those together, especially when the world was stuck at home in front of a screen during COVID, EdTech was seemingly the only panacea and solution for everything that's around learning. And being in EdTech, the larger question today is their valuation seems obnoxious. Yes, as a market, India and all our investors would need to show off unicorns, which is exactly what we have been doing in the last few months. And suddenly these layoffs, and I don't think it is going to be one-off event. By the way, it is not only going to be Byju's. Byju's is in the news for a lot of other things as well. A lot of other startups and also larger companies, conglomerates are also actually referencing people. For Byju's, the bigger challenge is investing winter plus the skill set issues, mismatch. The larger worry I have, Shweta, I think that's the elephant in the room, is I can understand equity because startups are all about risk funding, which is equity, taking a punt on the idea and the ability to convert those ideas into money. But what about debt? I mean, what made a startup assume such debt? And today it's such a murky scenario. I mean, in any country, they're fighting a case in the US where debt is far more supreme than equity. If you look at even the IBC in India, debt is respected far bigger than equity. You can't say I will write it off. There's no write off. There is going to be a prolonged legal battle. That's reality. And that's what gives me discomfort. Saying, are they going to be the poster boy for investors to say, in India, nothing works? Unfortunate, in India, a lot of things work, a lot of unicorns have been built here, but we don't want a poster boy of flogging why things don't work in India. It's sending a wrong signal. And which is where I think the silence from the cap table investors, some of these investors have been with Byju's for a very, very long time. And what's their view and what are they saying? And so the fear I have is, have they all been doing past the parcel musical chair? Just pass the stakes at subsequent valuation round every single time. And at some point the music stops. What happens? That's the eerie silence we are seeing.
Okay. There is an eerie silence, and for me, the story, if I were to break it down for our viewers at this point in time, make it easier for them, there are multiple stories at play here. One is the story with respect to valuation. Other are, of course, the legal troubles that the company has. That is with respect to the debt it has on the table. I want to understand first the valuation story. Valuation to the point of almost being halved or less than halved, 60% below its peak valuation of $22 billion. What exactly happened there? Sreedhar, if you could come in first.
So listen, I have a very different perspective to this. These valuation numbers, when they are good, we make everybody poster boys. When questions are raised, again, you are raising the question at the founders. My question is, how many of these valuations are dictated by the founders? Right? 9 out of 10 times, it is the global investor or the existing investor who is valuing the company at whatever the number is. Whether it is from our first unicorn to the latest unicorn, tell me an example where the founder has consistently said, this is my valuation. You want to put money? Put money. It doesn't happen like that. Right? The global thesis of investors and their projections of how this valuation could go and their exit strategy, many people are giving their views and their numbers and them becoming lead investors. In the initial stages, yes, possibly there is a discussion, there are thoughts, but towards a larger story like this, I'm very sure it is not the founder who dictates the valuation alone. It is the global investors who have all have equal role in dictating finally what is the valuation of a round.
So then I understand that, Sreedhar, but then how do you explain this valuation game to somebody who's watching here? And you are right in pointing out that it's not the founder's mistake. You cannot pin it on the management of Byju's. They're not responsible for an inflated or deflated valuation. It's the investor. How do you really explain this changing valuation?
See, listen, I've personally felt this word inflated is not relevant in the venture capital world. Okay? When a company does zero revenues, companies may have valued at $200 million globally, $500 million globally. That is the way this world is built. Now, my learnings, limited, but my learnings has been purely based on what is the future global potential of an asset. Right? whether it is a company in India, whether it is a company in Jordan, whether it is a company in the US, the future global potential of an asset going through the various models which a venture capital or a private equity goes through is what in a way dictates a valuation. I am personally believing that it is not a multiple of a revenue or a profit, which normally you and I will know as normal investors, but that is not what dictates the valuation of a large organization. Let me give an example. If somebody is manufacturing a drivetrain for an electric vehicle, he just has a factory with zero revenue. How do you value that company, right? You look at the growth of the electric vehicles in the country, how much of Chinese import is coming in, can this company kill that import? It's a total future projection of this company's growth potential and how much does it dominate the market. And in the current situation or the current topic at hand of Byju's, at that time, they possibly had one of the best solutions which could have deployed globally, especially in the Middle Eastern market, in the Western market. And the adoption velocity in a country like India proved cake that this can work. Now, Srinath mentioned about their acquisitions, which I don't have too much of a, I don't want to touch upon that topic, but the core product of Byju's from a user's perspective showed numbers in India that a lot of people, maybe paid, unpaid, whatever users, they like the product. And that getting adopted globally to the global investors felt, yes, this is a very strong tech-led, content-led education edtech solution. Now, this is what we need to, as larger people, we need to absorb this angle as well. Now, what is the future potential? Will 5% of the whole students in the world adopt this? All that comes with the multiple rounds of funding, which enables larger customer acquisition, establishment of possibly an omni-channel model for certain countries, alliances, like Srinath said, certain technology acquisitions, which is required in today's world. So that's the way the whole game is played, and it's a long-term game. I would say there's a 10-year game which Byju's would play, right?
Okay. All right. So and so I understand you don't like the word inflated valuation, and let me then take this question directly to Srinath here. For an average person, and it's an interesting proposition. I think what Sreedhar explained also clears a lot of air around. You cannot pin the blame of a decrease in valuation on the founders or on the management. It essentially boils down to the proposition that Byju's has to offer. So what changed since last year to this year with Byju's, Srinath? What changed so that the valuation was literally halved, or in fact more than that, it was down 60%?
So multiple variables there. One, when these valuation rounds kept on scaling up, we were in the midst of COVID. We thought that online education or learning is the only way to go. And also the price velocity. I mean, if you look at some of the Byju products, they're far beyond the reach of the average middle class. And that's the larger story, right? If you're selling to India, price sensitivity is something very, very crucial. So you can't continue selling products which are 1.5, 2 lakh rupees per year to the average Indian. It won't work. What didn't work was the huge amount of complaints that we started seeing last year on social media about not just about Byju's, but other tech companies and their pricing and their various strategies. That started blowing out. And I think the investors, here in this case, the private investors, did not assume the reaction of the Indian government, that it came very quickly back to the table and said, we are going to start looking at these complaints as serious consumer complaints. Okay. The third one is we have the larger investment winter globally. And if you're already at a $10 billion valuation, what next? And to me, the closer analogy of somebody actually walking away from the deal or for whatever reason in private domain or public domain was the closest was the PayU and the Buildest acquisition, right? I mean, again, touted to be a large acquisition, didn't go through. But in this case, very, very simple. It's not about whether they're value inflated or whatever. At this point in time, are they seeing this valuation as right? And I think the larger topic is each of these private investors have their own exit window. They're also responsible for returning money to their investors. And during an investing winter, are they under pressure from their original investors to return some of these monies? So are they cutting losses and exiting? That's a challenge and that's a narrative which not many of us will actually come to know. We are hearing of large guys like SoftBank actually exiting or trying to sell portfolio companies in the US and not many takers for portfolio companies, simply because they need the cash to return some of the funds back to those investors. Okay. So it may not be only about Byju's, it's also the environment that we are seeing. And I think just to address Sridhar's point about valuation not being dictated by the founders, largely yes. But one of the behavior which seems to be very peculiar to the Indian founders, at least the successful ones, is this. A lot of them have actually turned mentors and serial angel investors rather than focusing in building their own companies. I mean, the moment they hit some milestones, they start playing angel investors and invested in 200, 300 companies. Where is that time? If they only spend that 2 hours extra in their own business, running it and turning it profitable, I think
Right.
they will be doing service to their own investors.
Okay, fair enough. I also want to understand, would it be right to assume at this point in time, Sreedhar, that Byju's has financial woes, and largely on the back of the fact that it has decided not to make payments of the term loan B, stating that the Redwood, in this case, the asset management, investment management company, indulged in predatory tactics. I understand the case is currently in court, but would it be right to assume right now, at this juncture where we are, that there are financial woes at Byju's?
So they'll be cutting costs like, everybody is doing, right? This particular instance of this legal case, I would not call that as an exception, but obviously companies like them at the moment, the primary objective is to cut costs, whatever it be, preserve, because this is a winter, let's preserve. And I'm sure the layoffs is a trigger for that, right? Why would I lay off when I've spent so much money and effort to hire people?
Yeah, but
So
then you don't take them to court if you're not able. I understand you preserve, you lay off, but you don't take your lenders to court.
So that is a very sensitive matter, which I think they are handling it the way they're rightly done in that country. So I wouldn't want to comment much on that particular aspect, but I would view these two things. When you're saying is that the cost for the layoff, I don't think that's the reason, right? These are,
Okay.
to me, these are aspects. And yes, lenders having issues with large players. You have investors having issues with large players, right? You have other unicorns in India having huge problems with their investors. So this is not a one-off situation. It has happened elsewhere in the country. It has happened in the country, our country as well. But just digressing, I just want to make one small point here. Possibly, we are talking, we are the 20th or 30th location now in the world. We are a startup, hope to be a startup capital. But I think what we lack in the country is strong domestic capital. So just imagine the same Byju scenario. Assume 50% of their investors were Indian LPs, Indian large fund houses. I would have a feeling this would have not spanned out the way we are talking for Byju's or X or Y or Z. We have created a fantastic ecosystem in India to build the startup world, but the speed at which the domestic capital industry, domestic capital, large funds, large balance sheet investments from large Indian companies, that lagged significantly. Now we see a lot of family offices waking up, but none of them would, I'm presuming, would have the current mindset to put in $1 billion in a Byju's. It should have been the case. We are a large country. We're not a poor country from that perspective, right? So I was just always thinking this as possibly the single focus this government should have, that the startup train has gone really fast.
Right.
Now the domestic investment train has to go as fast. You can't just blindly wait for the LPs in the Western world, specifically US, funding into a venture capital firm, and then our industry, our companies growing. We need that money, but we can't be 100% dependent on the Western world or to some matter to larger players elsewhere in the Southeast Asian market.
Okay.
Indian investors should have a reasonable pie and should be encouraged to grow their fund base in India. Then you can't say that there's a funding winter. Funding winter has impacted us purely because of a particular country, right? So imagine this funding was coming from a balance sheet of a highly profitable Indian company. We wouldn't have spoken this.
Okay.
So this matter which I've been always thinking, hopefully, with this funding winter, with the cumulative layoffs, we are talking, you are talking, I'm talking, Srinath is talking, somebody hears us out and create very lucrative models in India for the companies to create
Right.
strong funds.
Okay, we would all hope that, but I think, in accordance with what we were discussing, Srinath, just prior to the show starting, I think it all boils down to debt. How much, to what extent?
Yeah, I think this entire issue is all about debt, right? Why is Byju's fighting in the US? The average cost of a legal battle is going to run into a few $1 million. Let's say even an hourly cost of billing of $700 per associate or a blended cost, we are talking about millions of dollars in this fight. Right. Why debt is a big issue? Equity, every single serious investor can write off equity investments in a venture capital or a private equity as zero. I mean, they tried, it didn't work, and they walk away. Debt, the lenders are going to fight till the last penny, last cent. And that's a challenge for Byju's
Right.
or any founder. You take a debt, and if it had been in India, I mean, just to see this point, if any lender had lent to them in India in rupee, they would have taken them to IBC for even defaulting on 10 lakh rupees or a crore of rupees and got them bankrupt. The company would have shut down. In a sense, they're far better off than they are in the US. It's going to be expensive. And lenders are far better right than the equity holders in the US as well. So
Right.
that's why I'm worried that debt is a very challenging proposition. And
Right.
what were the cap table investors thinking or the board thinking when they allowed them to borrow so much of money? I mean, you didn't have net worth. I mean, only on valuation basis do you actually go and borrow so much without cash flow. That's to me surprising because in the US, even junk bond has a value. People will lend you money, but if you don't have the ability to service, they're going to take you to the court or the cleaner, whichever comes
Okay.
first.
All right.
And that's a challenge.
Thanks very much, gentlemen, for joining with your inputs on that story. Byju's, the story of Indian startup ecosystem, the flag bearer of the momentum that Indian startups have seen growing in the past couple of years. The sheen seems to be going away a little bit. It could all be temporary, but trouble there, of course, mounting for Byju's at this point in time. Lot of things that Byju's Ravindran have to look at, including debt. Debt there should be one of the number one focus for Byju's Ravindran. But we'll have to end it at that. Thanks very much for watching.